It was a Bloody Mary morning when she left me without warning sometime in the night. It is sometime in the day. In fact, it is 10:06 a.m. on the Swatch Watch Central Standard Time. That's July 19th, 20 and the 23 on the Mayan calendar. Checking out the T. Not bagging us today, are they? Up 8.33%. Of course, they're up from falling off a cliff recently. So I was thinking, hey, today might be a day that we could make a trade on some calls on the A, the T, and the T, AT&T. Let's take a look at the action. So if we look out, I was thinking about something very conservative. So I was thinking 17 bucks on the call. So obviously, short trade between now and Friday, you're going to catch $0 bills. So let's look a week out from Friday. So it'd be 9 days out from today. That'd be 4 cents. All right. Then we go another week out on the 17th. So it'd be a 16-day trade from today. And that's only 5 cents. So only one more penny per share. How about another week? 23 days out, and that's still only 5. So I think our best action is going to be 9 days out, collecting 4 cents on 17. What does that look like? 0.04 divided by the 17, divided by the number of days, 9 days in the trade, multiplied by, carry the 1. So it's 9.5% on that particular trade. Plus, of course, we want to maintain ownership so they can continue to pay us big dollar bills because they have a very nice dividend yield. Just looking over at the big board here, checking on the S&P 500. So let's try to collect that 4 cents. It's a 94% chance of profit because we still want to maintain ownership on the shares if possible. We have 10 contracts we can trade. So if you're going to tell me you're just going to collect $40, but it's $40 that I didn't have that will likely just go into my pocket without all the 1,000 shares being called away at the 17. So I think we'd be in good shape. I would imagine that you would agree with that. And that should fill right up since we're only asking 4 cents. So there's $40. Then if we look at AT&T, see what their sweet dividend, because I know I've got a nice dividend pending from AT&T and Verizon. And let's see here. Let's check out the current dividend yield. So based on where it's at today, so if you were to buy it today, actually that's probably yesterday's number, isn't it? Let's check the math. So if we look at the annual payout of $1.11 and then we divide it by the current price of $14.58 divided by $14.58, we get a yield of 7.6%. So my bad on that. If you would have bought it yesterday, you would have had locked in a dividend yield of 8.25%. If you buy it today based on the current price at 7.6%, still pretty good. That's still a lot of dollar bills for basically doing nothing. And yeah, they're likely not going to have a lot of growth. That if you look at the factor grades, their valuation is an A, growth is an F. So boom, 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 you're trading that sweet dividend for the idea that you're likely going to make $0 on growth. Now, again, I wanted to buy it 2 days ago and I just didn't have the guts to do it. And if I would have, I could have flipped those shares today and made 8.4%. In fact, probably would have been a little bit more than 8.4%. S&P 500. It had a couple of really big candles down, but now it's climbing its way back up. Currently at 45.67, 45.68. So it's up 0.3%. Dow Jones up 0.41. NASDAQ up 0.34. And what is our friend the crude oil? Crude oil up 0.63. So that's why our number, let's see if we go here, click on the main screen. We are just above 1.7 milli in the account, thanks to all of our oil stocks. Can we trade a little Verizon? So Verizon got some tailwinds today as well. They're up 5.35. I want to be conservative with them as well because I have to be, because I have an average cost of 37.66. Now that, of course, does not take into account all the premium and dividends I've collected along the way. So I was eyeballing 37. 37 should put us in a nice conservative around 90% on the probability of profit on these calls. Sell call, let's look at the numbers. If we looked at the 37, there'd be $0 this week. Next a week, 37 would get you 13. Okay, and then another week later, what would the 37 get you? 17. So if you run numbers just based on that, so the 17.17 divided by the 37 divided by 16 days in that trade, multiplied by the 365, that's 10.4%. Okay, so if we back it up a week, that's 10.4%. Keep that in mind. And then we look at our 37 here. So it's 0.13 divided by 37 divided by the 9 days in the trade multiplied by 365. So that's 14.2. So that's the trade we will pursue. And I think we have 1,400 shares. Yeah, 1,421 shares. So we can go 14 contracts on the Verizon, which has a 90% chance of profit, meaning that it's a 90% chance, 89.99% chance that we will just maintain ownership of those shares and all of the. Should we try for 14 per? Let's just go ahead and try it. It may not fill right away, but let's put it on the board at 14. Let's see if we can collect $196 on those covered calls. Holding our breath. Now it's showing us 13 and 14. Let me pull up Verizon and see what it's doing minute by minute. Checking on the Big Mac over here. Let's pull up Verizon. V to the Z. Verizon Communications. Okay. Very nice. Check on the chart. So it looks like it had a 34.11 up to 34.16 was the high today, currently trading at 34.04. I'd like to just move along with my life, so let's replace that order. Continue. Just in case it backs. Hey, it says we can get 14 here. Let's try it again real quick, like while the momentum is in our favor. Can we do it? There it is. So we did collect the 196 on Verizon. So we got that going for us. But I also wanted to check. Well, let's look at our trade just to see where we're standing here. Let's see where we stand. Close off some of these windows. See if we can't turn down the internal fan on the MacBook Air. It's from like 1992. So AbbVie, even though it's showing only 18%, it's still sitting pretty to me because it's a 141 call expiring Friday, which is 2 days, and it's only at 137. So I'm not sure what the deal is there. Am I missing something? Am I missing something on the AbbVie? Are they reporting earnings that I wasn't even aware of it? I'll be so mad at you. AbbVie. Yeah. So it's July 27th. So that'll be next week. They will report their earnings. So we got Albertsons is at like $22 right now. Let's check because we may roll it as we speak right now. Because it's a monthly. So it's at $21.99. So it's just under $22. Let's check on Albertsons dividend. Check on the Albertsons dividend. It's got an ex-dividend date of the 25th, so that's part of our situation here. So today is what, the 19th? Today is the 19th. That's 6 days, 6 days away. Let's see if we can't catch some action on Albertsons by rolling this position out a month. We've got 500 shares. Can we kill $2 bill stones or birds with one stone? Whoa. Something weird going on there. Watch the number on Albertsons, $21. And that's next month. So that's August 18th. It's going between like 2 something and I don't know why it's doing that. Hold on. We got the wife calling here. We're going to pause 1 second. Hold on 1 second. And we're back. She wanted to tell me that kid 3 wanted me to take him to the gym, but her and I were scheduling a walk for the next nap that the dog is going to take. So I think I'm going to take him to the gym, and she decided she's going to take Stella over to the office to show the office girls little cute Stella. So you see the action that's going on here, though, on the Albertsons. It must have a crazy low amount of open interest. 14. A 14, like if we clicked through it. Yeah, that's crazy talk. So we'll have to come back to Albertsons. Can't roll that currently because there's not enough open interest, apparently. The same with City. City is up, flying over $47, and we got a $45 call. So we'll look tomorrow or Friday to roll that, depending on what's going on. And right here on the Dell, it shows that we're down 115% on the Dell credit spread. But Dell is trading over $54 a share. Let's look it up over here. Dell. Michael Dell, still at it after all these years, huh, Mike? So they have ex-dividend next week. We talked about they don't have an earnings date until the end of August. So we'll let that play out tomorrow, because we could, if we wanted to roll the dice, take our chances, we could trade away the 10 long legs. For around $150 of a credit if we wanted to roll the dice and check our chances. So we'll keep an eye on it, though, for tomorrow and possibly Friday before we make a decision on that pose-ish. $53 Devon calls looking good. Energy Transfer, it's just over $13, I believe. $13, $13.19. So that's a decent amount over 13. And they have dividend coming up soon, right? Dividend date on Energy Transfer is, let's take a look here. It's the beginning of August, according to research we did yesterday, if you recall. Beginning of August, so we can wait another day or so. We may roll that before the end of the day today. We'll see. And then Johnson & Johnson, that call's looking good. Coca-Cola, I think it's under 61, but it might have breached 61 today. Yeah, 61.30. They're up 1.22%. So we'll roll that at the end of the week. And Merck & Company looking good. Pepsi, though, they're probably above 185 right now. Let's take a look. Let's take a good look at its face. 185.28. So we'll be looking to roll that tomorrow or Friday, probably Friday. Suncor, we'll have to make a decision because it's above 29. It's had enough premium every week to keep us rolling that 29. Oh, yeah, I know what else I wanted to do. I'm glad you looked through here. So, yes, so this is, we talked about this yesterday, the Exxon Mobile 99 puts. We have 10 of those, so that represents $99,000 in collateral. Let's close it right now. Close it on down. So that would cost us approximately $80. 80 to 90 bucks to close it, and we collected $470 on July 14 when we put that trade on. So just a handful of days and some nice profit taking. Can we get the 8? Let's go 10 by the close. And let's go with can we try to get it for 80 bucks? Close that down and then book that trade as the profit, release $99,000 in collateral. Let's see. Currently, it's telling us no, you cannot do so. Let me look up Exxon Mobile on the Big Mac. See what it's doing minute by minute. Yeah. Go to the chart. Hey. Why you no fill? It's currently at 102.29. I would think that would fill. Should we leave it on the board, roll the dice, and take our chances? It's $10, Bart. It's $10. Let's replace the order. And then we'll put it at the 90 bucks, get it filled right now, close it down. Oh, what's it saying? Go back to the main screen. Is it showing it pending or did it fill? It filled at the 80. Let's go back and make sure. It cost us 80 bucks to do so. 80. Where are we at? Scroll on down the road. We can't, says we canceled it. It's confusing me. Exxon is confusing me. Let's go into the trade. Bear with me. We'll get this right. Where are you at, Exxon? There it is. All right. Well, I think we might be able to do the 80. Nope. It's going down as we speak. We'll still have to do the 90. And I'm fine with it. Let's just get it off the board and the profit into our pockets, right? And then we'll do some math. So that's going to cost 90 bucks to close that. And 5 of them, 10 of them. Okay, so $90 is what we had to spend to close it. We are in the trade since the 14th, right? So that is 5 days. So it may not seem like a lot of money, and it's not when you compare it to the 99 grand we had to cough up. But we collected 470, and we just paid 90 bucks. So our net profit was 380, right? $380 divided by the collateral of 99,000. So that seems like peanuts, right? And it is. It's less than 1%. But again, we've only been in that trade since the 14th. So we divide it by the number of days, and then we multiply it by annualized 365. So it's a 28% return on collateral within those 5 days if it was annualized. So if you were to repeat this trade over and over and over again, it'd be 28%. But again, it is $380 that I didn't have going into that trade. So I'm good with it. And you know how volatile oil is. It could be down again tomorrow. And then I'd be like, why didn't I close that trade? So I'm happy that I did that. And we've currently reached the 1.701 mark on our way up to 10. There it is, 1702. So we're up almost 11,000 bucks today. So very nice. Got those things going for us. Thanks for tuning in. We'll keep checking on the market. Oh yeah, I wanted to look at Lockheed Martin. See what it's doing. Pull it up on the Biggie Smalls over here. Killing me, Smalls. Let's go here. Currently at 449.91, 449.89. So 2 days in a row, Lockheed Martin taking it on the chin. And I was wondering if there was a short-term credit spread that could be done. That would be interesting. So let's take a look. Sell, put, 2-day trade. Okay, I know, risque. It's a lot of risk involved. Like this 445 to 442. Let's just check this. If we put that on the board, if we flip it around, it's only 25-cent credit. All right, let me see here. Let me go a little less risk just to see if I can improve the numbers between the long and the short. So if we moved another strike down to 442 on the short side, and then what would our 440 long look like? Now we're at 15. Yeah, I don't think so. I'll keep taking a look at this. I'll keep taking a look at Lockheed Martin. I think it's unrightfully taking it on the chin right now, considering the fact that I thought their Q2 earnings report was good. And yet it's, again, the market's unpredictable. It's been down 2 days in a row, a decent amount. So was it overvalued? Maybe not. But for now, we're going to wrap this up. Thanks for tuning in and checking out still can't see it. My sweet Fu Manchu mustachio. Make sure you do indeed subscribe to the channel, like this video and all others, leave a comment, share it with a friend, a non-jackwagon friend. Just say, hey, you got to check this out. You ever think about options and dividends? Check it out. And I'll see you in the next video.